It is time now for Better Money with Joel Johnson. Today we are tackling the question, is your retirement portfolio protected from a stock market crash? Joel is a certified financial planner and managing partner at Johnson-Brunetti. We're happy to have you back with us today, Joel.
It's good to be back, Kara.
And so we've been talking a lot about this because every day people are seeing all the financial news, some big swings out there. Are we really in for another crash? And you know what we need to know.
There's a lot of fear out there in the market, and this is the time where people make mistakes by making decisions based on fear or greed. And so we've got to be really careful here because we're overdue for this market downturn. It might not be called a crash, but we are way overdue for a market downturn from a time standpoint.
Okay, so number one, if you want to determine that your stock, you determine your stock and bond mix and then rebalance it. You use that word rebalance a lot.
Yeah, we've talked about that a lot before. Once you put a financial plan together, and let's say your stock mix is supposed to be 50% of your money and you're supposed to be 50% in bonds. Well, like the last few years, if the market goes up a lot more than the bond market, you're out of whack.
You're out of whack.
You're not 50-50
you feel
anymore.
Good.
You're feeling great because you've made a lot of money, but now you're 70% maybe exposed to the stock market, which is getting you way out of whack. You're taking more risk than you were supposed to according to your financial plan, and you might get hurt. So we've got to rebalance. And like you say before, Kara, you can just hit a button and rebalance that 401k if most companies just have that.
Log online and there's like that big button.
Exactly.
Yeah, it knows what to do. All right, so mistakes you say are costlier in the retirement red zone. What's that?
Okay, so the retirement red zone is 5 years before and 5 years after retirement. If you make mistakes with your portfolio 5 years before retirement, you don't have time to wait now for the market to recover before you need to start taking income off of that money. If you make mistakes 5 years into retirement, now the fear really takes over because you realize you've lost your earning power. So that retirement red zone 5 years before and 5 years after, mistakes are magnified. They're more costly. It's why people really need to make sure they're cautious enough, but they're exposed enough to stocks so that they can fight inflation. And that's a tough line to balance there.
Yeah. So you really want to determine the possibility of your potential damage, and we need to look back here because in 2008 the S&P lost 37%, tech stocks lost 45%.
Right, and people I don't think realized how drastic that is. If you have $500,000 in your 401k and we lose 37%, that's all the way down to almost $300,000. That's severe. Think about how you're going to feel if that's your retirement funds and you're close to retirement. 45% if you've been in the stocks that have really rewarded us lately, which are tech stocks. That's almost half your money.
Yeah.
That can really set you up for not only devastation emotionally, but now you might have to work a lot longer than you plan to. So it doesn't make sense to take this extra risk. And the problem is we feel good about how the market's done, so we're tempted to take that extra risk or just ignore the risk we're taking.
Okay, and the last point, you just want to have some of your money insured. If you could tell us about that quickly.
Correct. So there are insurance companies that produce products, some of them annuities, some of them called guaranteed investment contracts, where your principal is guaranteed.
Yep.
And there's a lot of investigation that needs to be done here because there's good products and bad products. But I have some of my money insured, so no matter what happens in the market, it can't lose principal.
So you want to learn more? Get the market correction brochure. All you have to do is go to bettermoneytv.com and you can get Joel's offer for free. Thank you so much, Joel.
Thank you, Kara.
That's Better Money.